but the broader Japanese economy.
Ankur, let's talk about the reaction in emerging markets, particularly India. We also had our fair share of the relief rally. And not only that, there are definitely some additional wins in the sale, like hopes building in for a possible rate cut on October 4th. How do you see these two factors playing in today's market rally?
Sure. I definitely think that a component of it was a relief rally as the Fed stayed on hold. And I think people are coming to the realization that Yellen is somewhat of a dove. And I think maybe the earliest rate hike you'll see is either in December of 2016 or early in 2017. So I think a large part of the rally was just on the back of the Fed decision not to raise rates. And I think definitely there is a case to be made about an interest rate cut in India. And I think that will definitely drive the financials, as it's always bullish for the banking stocks.
Ankur, bond yields have been heading lower. In fact, fresh, multi-month low today, both in the new series bond as well as the older one. That also seemed to be giving some amount of push to financials. Today, clearly, financials were leading the gains, but they've rallied a whole lot as well. The microfinance companies, the PSUs. Do you think there's more juice left in the financials?
Basically, the key for the financial space is the steepness of the yield curve. So absolute interest rates matter, of course, but also if your funding costs come down on the short end and the long-term yield stays around 7.5% or higher, it's always bullish for the banks because your net interest margins expand. So I think the key is if short-term funding costs come down and long-term rates stay where they are or come down marginally, I think that's always a good sign for net interest margins, which is what drives profitability for the banks.
So having said that, Ankur, what's the call then on, say, some of the microfinance stocks, private banks and PSU banks, which have actually rallied up quite a bit? Does it make sense to, invest even at these levels?
I think if you look at what's happening on a secular trend is basically you have the PSU banks with very constrained balance sheets. So basically they had a huge NPA problem, which I think is continuing. And basically what that means is that now they have to conserve capital. So what's happened is the NBFCs and the private sector banks have kind of stepped into place and taken market share in terms of lending. And I think the NBFCs in particular, I think in terms of the microfinance and the personal finance have done well. I just think it's early to tell in terms of how that cycle will play out in terms of the lending growth because you really haven't seen a big NPA cycle yet, and I think it's a little early to say how the credit quality will be maintained for some of these companies that are just relatively new, essentially.
Right. Ankur, the other bit is about what this festive season holds for the Indian consumption story. Do you think that we're going to see at least incremental demand in the economy pick up as we head into, say, the festive season?
Yeah, I think it's interesting. If you look at the current market, you're really seeing kind of the consumption-driven stories that are really rallying here, and some of the export-driven sectors like IT and pharma lagging. And I think that it makes sense to a certain degree. I think with the 7th pay commission and the pay hikes coming in for government employees, I think that definitely consumption will be a big story. And companies like VJ Sales should obviously benefit. I'm sure the autos will benefit. And to a certain degree, some of the NBFCs will also benefit. So I think to the extent you stay focused on some of the consumption-driven sectors, I think you should, place to do well over the next 2 to 3 years.
Ankur, leave us with your thoughts on what have you been reading, what kind of research are you reading, or your conversations you're having in the investing circle regarding the sentiment in emerging markets, particularly in India.
Yeah, I think, it's interesting talking to foreign fund managers and some of my colleagues. I think people are I think the biggest risk right now is that you have an aggressive Fed. I think that's kind of been taken off the table with the Fed kind of holding back this time around. And so I think, even with a rate hike cycle, I think the emerging markets can still do well. But I think people are kind of coming around to the fact that the underlying demographics are very strong. It's a secular growth story. And I think, whether you have a rate hiking cycle or not, I think the emerging markets should still perform well going forward.
All right, gentlemen, all three of you, in fact, Ankur, David and Kamal, thank you so much for taking time out for us and more importantly, walking us through what the Fed playbook is looking like for this market. But time then on Smart Markets to cross over to Ruchi Bhatia, who's waiting by in New Delhi to walk us